Hi, and welcome to another Lodgify webinar. I'm Alberto, and you might remember me from our previous webinar, the one that we hosted around 3 months ago, where we talk about guest tips to make your guest experience as good as possible. Last time, guests were the main center of our attention, the main topic of the webinar, but today it's going to be you, host and property managers, the ones that are going to be in the center of the attention. And this is because we're going to talk about a very important topic for every short-term rental business owner or property manager, taxes. And, like I said, it's a very delicate topic. So I would not dare to speak about that without being an expert, which unfortunately I'm not. But luckily, I have someone with me today that it is. That's why I'm really pleased to present you to Justin Stasio. He's a senior onboarding specialist at Avalara, which is a tax compliance software company that also offers automated solutions for short-term rentals. So, Justin, thank you very much for joining us today.
Absolutely, Alberto. Thank you so much for having us and hosting this webinar and helping us promote. Taxes are absolutely a critical part of the short-term rental business and the processes around it. There are many different types of taxes that apply to operating a short-term rental business. So today we're going to really go over one type of tax, which is called lodging tax, and this is essential to maintaining your short-term rental within the guidelines of the law. So I thank you again to yourself and Lodgify for helping put this webinar together, and to all our attendees for being interested in the topic, wanting to learn more, having that curiosity, and joining us today.
Thank you, Justin. It is indeed a very interesting topic. And I mean, I think we've beat the highest record of attendance or at least registered people for the webinar with over 200 people, which I can say just thank you all for being here. Before we get into all the details, as always, let me start with a small presentation about some technical elements of the webinar, but also a bit about Lodgify. It's going to be just a couple of slides, and then I will leave Justin tell us everything he has to tell us about taxes. So I'm going to share my screen now. There we go. And well, as you know, the topic of the webinar is everything you need to know about short-term rental taxes. But before we continue, just a technical reminder that I always say, keep in mind that we cannot see you or hear you, but we can indeed reach you. And actually, we encourage you all to submit your questions throughout the session. As I left in a message before, we will have a Q&A session at the end. But I'm going to ask you for please be as generic as possible with your questions because, like I said, there's a lot of people here today, a lot of questions already in the chat. So if you make a question, please make it generic. So it's not only for you, but also can help as many people as possible. We also have a chat that I see that people is super active already in the chat. That's great. You can also leave your comments there. But again, if you have a question, I would appreciate if you guys can use the ask a question section because that way it's going to be easier for us to track all of those questions. And yes, as well, there was a question at some point. We will record the webinar and we will send it to you afterwards. Also, I think there was a bit of a misunderstanding maybe at some point. We're going to be focusing exclusively or mainly on US. So I know there's people from UK and other countries that are also interested in taxes. This webinar might not be for you, but we will send a feedback survey afterwards where we would request for any suggestions. So if you have a suggestion to do a webinar about another country that is not the United States, please leave it there so we make everything we can in our power to do a webinar or a session in the future about that. That out of the way, well, I already presented myself, but this is me again. I'm Alberto Fernandez. I'm the SEO and content lead here at Lodgify. I've been working at the company for a bit more than 3 years now. And this is my contact information in case you want to reach out afterwards after the webinar with any questions. We would also send this presentation and Justin's presentation, so you will get our contact information there. So 5 cents about what is Lodgify. So Lodgify, for those that don't know us yet or are not the customers yet, is an all-in-one vacation rental software that empowers owners and property managers to easily create bookable website to accept direct bookings. So hosts and PMs can manage all reservations and guest communications from one centralized platform, as well as synchronizing all the listings, calendars, rates, conversations from external channels like Airbnb, Vrbo, Booking.com, etc., and your own website. So Yeah, there's a 5 cents about Lodgify. Also, some quick data about us. The company was founded in 2012. Technically, we're still a startup, although we're rapidly growing. Actually, now we have over 220 employees. Last time we spoke, about 3 months ago, we were at 190. So things are growing pretty fast. We speak and support 7 languages. We have customers in almost 100 countries. And whereas a headquarters is in Barcelona right now, we also have offices in the US and Latin America and the UK. Sorry. So, like I said, all-in-one platform, 3 main features: channel manager that allows you to to synchronize your calendar, your listings, PMS system, and website builder and booking widget. Basically, the booking widget, just to clarify, we can we offer the option for you to create your own website with Lodgify, but if you already have a website created with Squarespace, WordPress, Wix, or any other CMS, you can embed our booking widget so you can still enjoy the benefits of using a reservation system and a PMS and a channel manager, of course. These are some of the features, the new features that I already mentioned also in the last presentation, but since there's a lot of people new to this webinar, maybe they're not aware, so I will go through them really fast. First is the mobile app that we released at the end of last year, which now you can manage all your reservations, calendars, transactions, and communications from the palm of your hand. Really easy to use, really convenient. And also, last time I spoke to you, I said that we had an integration with Google Vacation Rentals coming soon. I'm really happy to announce that after some delays, it's finally here. The integration is finally live. At the moment, it's only available for users with 5 listings or more, but we're working on it, and the plans are that it's going to be released for everyone in Q2 of this year. Basically, what this means is that now you can integrate your listings with this meta search engine for vacation rentals that Google has. And basically, you're going to be outranking on Google, even the most popular OTAs like Airbnb, Vrbo, and Booking.com. And the best part is that in the end, whoever clicks on your GVR listing will be automatically redirected to your website where the transaction will take place, which basically means that you will not pay any commissions for those bookings that you receive through GVR. So great news, especially for those with 5 listings or more. And please stay tuned if you have less than 5 listings, because this is something that we have in the roadmap. And finally, this is a new slide that I didn't have last time. I just wanted to emphasize that even if we don't have any of the features that you're looking for, we still integrate with over 20 third-party apps from a wide array of categories, such as insurance companies, guest experience, guest verification apps, dynamic pricing tools, cleaning and turnover, smart home devices, and more. And this is the list that we have right now. But if you're missing any integration, for example, an integration with Avalara, you can check a roadmap, because we also have a lot of integrations coming up in the few months. So if you're a Lodgify customer, you can just log into your profile, go to the marketplace, and vote the integrations that you want to see there. Also, I'm going to leave a survey, a poll in this case here, so you can select if you want an integration with Avalara after Justin's presentation. So yeah, this is all from my side. Just a reminder that if you want to start a Lodgify trial, you can do it today. You can also ask for a personalized demo or a demo call or a demo account. If you become a customer, you will get free personalized onboarding sessions to get to know the product and all its features. We will also offer account management in the next months, and we have plenty of resources, not only to download, but also video resources like this webinar that you can obviously attend for free, plus 24/7 support. Last thing I'm going to say, we also have some people from Lodgify in the chat. So if you have some questions for our speaker, like I said, please leave it in the Ask a Question section. If it's a Lodgify question, our people in the chat will try to answer them. But please, let's try to stick it to the topic of this conversation, which is short-term rentals. And without further ado, Justin, the floor is yours. Thank you very much. I will stop sharing my screen now, and you can start presenting.
Fantastic. Thank you so much, Alberto. That was a great introduction and high-level approach to Lodgify. I'm really excited to continue for our organizations to build and expand on this really cool partnership that we've created. So I'm going to go ahead now and share my screen as we'll go into the lodging tax compliance. We call this a lodging tax 101. We're going to really take a high level approach into the lodging tax environment and some critical points that hosts and property managers need to be aware of in order to maintain their short-term rental businesses within the guidelines of the law. And in doing so, we will actually, let me go ahead and share right now. Actually, I need to open up my presentation again. Let me see if that. So we call this kind of a 101, but it certainly is a very detailed presentation. I'll just confirm with you, Alberto, that you are able to see my screen now that I've entered presentation mode.
Yeah, all good.
Fantastic. So, like I said, we call this a short-term rental tax basics presentation. However, we are going to go into some really really nuanced details and really critical things that we want hosts to understand as they manage their own and generate their own compliance strategy. Again, my name is Justin Stasio. I'm a senior onboarding specialist. I work with our sales and onboarding team as well as our business development team. I'm calling you today from snowy Denver, Colorado. So if we have any big skiers, I love to see that. I'm a huge skier as well. We've got some great spots to do it out here. I also wanted to expand on Alberto's qualification for today's presentation of short-term rentals in the United States. So my lodge tax works with owners and investors, property management companies that are abroad. However, today's content is relevant for short-term rental properties located within the United States or US territories such as Puerto Rico, Guam, or the US Virgin Islands. Those are all areas that are covered under the My Lodge Tax service. So the agenda for today's call is going to first to define what lodging taxes are. It's really important that we approach this by understanding at a high level what lodging taxes are in the scheme of the many different taxes that apply to our vacation rental business. We'll then go into the 5 steps to achieving lodging tax compliance. These are the 5 critical points that my lodge tax has identified as being crucial to maintaining a short-term rental property within the guidelines of the law. This will help you avoid any consequences or repercussions for not having the appropriate registrations or tax compliance strategy. So this is where we're really going to dive into those nuances and what really trips people up and how to apply these taxes to your vacation rental business. We'll look at lodging tax and vacation rental marketplaces. A growing pain point for so many short-term rental hosts is the application of lodging taxes when using a marketplace such as Airbnb and Vrbo. And so we're going to touch on this topic and go into some details about what these marketplaces are doing and how we as business owners and short-term rental hosts need to incorporate that nuance into our own compliance strategy. We're then going to go into a bit of a demo where we'll show you some of the UI of the My Lodge Tax product. Avalara My Lodge Tax is a product that's offered to short-term rental hosts and property managers. So regardless of the number of properties that you own or manage or simply operate, we're going to take a look at what the product looks like, the things that are required to onboard, and that ongoing process as we maintain that compliance strategy. I want to again thank Alberto for hosting us and our producers that are in the chat box. We've already seen so many engagement there. So as you have questions, go ahead and ask those questions as we present, and we'll get to as many of those questions as we can at the end. We always have some great questions. If you're thinking it, someone else is thinking it too. So let's dive straight in. The first thing that we're going to do is define what lodging tax is. Lodging tax is simply a general term for the combination of state and local taxes that apply to the transaction of a short-term rental, room, or property. Again, this is just a general term. And that really brings me to the first call out, which I like to start with, and that's terminology. I like to identify some specific terminologies, the similarities and the variances that we see across the United States. So lodging tax being a general term means that this is just a type of tax that needs to be addressed for our business, for us as short-term rental operators. In California, these taxes are referred to as transient occupancy tax. In Texas, it's called hotel occupancy tax. New York, just simply occupancy tax. And in Florida, sales tax or tourist development tax. These are great areas to call out because we do see that similarity or the usage of the word occupancy tax, hotel, transient. There's also the term sales tax or tourist development tax. So understanding the concept of lodging taxes is understanding the concept of sales tax. I think we're all familiar with the application of sales tax when we make some sort of purchase. These taxes apply. Us as the consumers are expected to pay these taxes. I like to call out the terminology first because this is a really great way to ensure that we're receiving the correct information from our state or local jurisdictions as we conduct our own research. And on the other side of that coin, making sure we're avoiding misinformation. We want to make sure we are applying the correct taxes and filing the correct tax forms. A great way to do that is by understanding the terminology used by your state, by your county, and by your city so we can identify the correct registrations, forms, tax returns, all of those things that we're going to have to manage throughout our compliance strategy. I also like to call out the short-term rental thresholds. Every state in the US also defines what their short-term rental threshold is. So the definition of what is considered a short-term reservation and what is considered a long-term definition has a clear line in the sand, if you will. The majority of the United States defines their short-term rental threshold as being less than 30 days or approximately 1 month. So any reservation less than 30 days is considered a short-term reservation and therefore will require the collection and remittance of lodging tax. Any reservation longer than 30 days or whatever that threshold is set at, those are long-term reservations and therefore lodging taxes may not apply to those reservations. So very important that we understand the terminology and where that threshold is for the states that we operate. Additional callouts here are a 90-day threshold. There are some large markets that extend their short-term rental threshold beyond that 30 days. I like to call out Tennessee, the Carolinas, really that whole Smoky Mountain area in New York. So big markets extending that short-term rental threshold, encompassing a larger group of reservations that are taxable. There are even some significant markets that require the short-term rental taxes or lodging taxes to be collected on reservations less than 6 months. This is prominent in Florida and Hawaii. So an even larger group of reservations which are considered taxable in these states. So that short-term rental threshold may be defined as 6 months or 180 days. Again, very important that we understand where that threshold is set for each of the properties that we operate. I always like to go over an example where we can put these concepts together and truly understand the complexities of lodging tax compliance. I mentioned that we will approach the state, the county, and the city for their own terminologies and short-term rental thresholds. On the left side of your screen, you're going to see a map. This is outlining the city limits of Myrtle Beach, South Carolina. Now, another reason why I love giving this example is because we generally have at least one property manager or owner who operates in this jurisdiction, so it may be extremely relevant to some of you. So there's your map of the city limits of Myrtle Beach, South Carolina. You'll notice that it is highlighted by a red shaded area. You can see the border and the shaded area, even some special jurisdictions located within that area. So any property within that red shaded area is located within the city limits of Myrtle Beach, South Carolina. And therefore, I'll direct your attention to the right side of your screen. You'll notice that chart that lists the various sub-tax rates that apply to that short-term rental transaction. At the very, very bottom, you'll notice that the tax rate is listed at 13%. That's the tax rate to which we ultimately need to charge our guests when a short-term reservation is made. However, we need to understand what subtaxes make up that 13% in order to apply that rate. Now, this is a great example because all three levels of jurisdiction, the state, Horry County, and the city of Myrtle Beach, are represented in this tax distribution. It's really important to call out because as we're conducting our research to understand the registration and tax requirements, we need to segregate each level of jurisdiction as their own specific entity. To put together the research to determine your total lodging tax rate, you must approach the state of South Carolina or Department of Revenue for any state required lodging taxes. You would separately approach Horry County for any lodging taxes that apply to their jurisdiction. And you would separately approach the city of Myrtle Beach to receive the information on any other lodging taxes that apply to them. So we can dive into those. We see the terms sales tax, accommodations tax, hospitality, all sorts of terminology being used here. But really, the main concept is understanding that we have to segregate each level of jurisdiction because each jurisdiction will only inform you of the taxes that apply to their agency. I also like to go over some assumptions that we really commonly hear at my lodge tax. And these are really just concepts that our agents and our customer support representatives work with hosts every single day to ensure that we're approaching our short-term rental business with the correct mindset. And the first thing that I call out is just that term business. Your short-term rental, regardless of your intentions, must be treated as a business. You're essentially creating a product and offering that product to the public or anybody who's willing to purchase that for consideration. Consideration is just a fancy term for money. They pay us to use our rental properties. So whether you're a seasonal business, you're just trying to make costs or break even on the property, regardless of your intentions of your short-term rental property, it's important to treat that as a business. And in doing so, understanding that there are specific registration and tax implications of operating and facilitating these transactions. We also touch on the term hotel. We get real picky about terms and definitions, and this is one that we certainly like to call out as well. Hotel, just like any other word in the dictionary, has a definition. And just like states in the US, every state likes to define that term differently. So in some states, a short-term rental property would fit the classification of a hotel. In other states, it does not, or it meets a partial definition. So to understand what our short-term rental businesses are, we are essentially a very similar industry to that of the hotel industry. Essentially, it's all hospitality, but there are certain subsets of our industry. And calling out that term hotel, we do have to understand we are providing a similar service. in that of short-term lodging accommodations. This means that the same or similar registration and tax requirements will apply to our businesses. Jumping over to my accountant or any other tax returns that you'll be filing, whether it's a federal or personal income tax return or corporate income tax return, we often get questions about the relationship between lodging taxes and federal income tax. Lodging taxes are a completely separate tax obligation from income tax. So what you file for income tax with your accountant or whichever financial consult you use, for that, you will continue to use those processes to file your federal income taxes. Lodging taxes is an additional or separate tax implication for operating short-term rental transactions. These taxes have no relationship with each other. Therefore, you can continue to file your income taxes with your accountant, and you have to be aware and file your lodging taxes separately. They don't have any implications or relationship with each other. That being said, regardless, again, of your intentions, the profits, or your revenue, you always have to be filing and aware of the lodging tax requirements. I always like to compare lodging tax application to the concept of sales tax because that's what is generally familiar to people. Doesn't matter what we are making as a profit, that's gonna have to do with your income taxes. These taxes are based on the reservation amount or the amount that the guest is paying. Lastly, for some of these assumptions, and I love touching on the topic of marketplaces, Vrbo, and Airbnb, we all might have some form of association with the tax remittance programs or these marketplaces automatically collecting and remitting taxes that are made on those platforms. So if we are using platforms like Airbnb and Vrbo, it's extremely important that you understand what taxes are automatically being collected and remitted, what taxes are not being collected and remitted by this platform, and therefore, what actions or accommodations do we have to make in our own compliance strategy to accommodate those nuances? As I mentioned, we're going to go into this topic a little more, and it's a huge pain point and question that we receive multiple times a day from our users. I also like to kind of bring it back a little bit and talk about the impact of lodging taxes. We can't ignore the fact that lodging taxes are written legislation. This is a law that we as short-term rental operators need to comply with in order to maintain our short-term rental business in good standing. So failure to comply with lodging tax requirements can result in serious consequences, penalties, interest, license revocation, all sorts of things. We certainly don't want to get in trouble. We can't ignore the fact that these taxes are written legislation. But there is some good that comes out of paying these taxes. It's certainly a very complex process that short-term rental operators need to navigate. And like I called out in that example, these taxes are collected and remitted to the state or the county or directly to the city. No lodging taxes are filed to the IRS or the federal US government. So what that does is that injects these taxes straight into our local communities. These often fund tourist development and other community services that we, our neighbors, our guests, and our communities get to enjoy. I also like to call out the fact that the more hosts and property managers maintain their compliance strategy and keep their businesses in good standing, the more in favor government jurisdictions become with the short-term rental industry. We are all on this call stakeholders of the short-term rental industry, of course. And I think we all share similar headwinds and pain points when operating our business, whether that's confronting neighbors, communities. And so again, the more businesses maintain their compliance in good standing, the more in favor these jurisdictions become with our industry. They're getting more money, they're getting businesses to comply with their requirements, they're going to be in favor of that industry. And we really see this accelerating over the past 10 years. Now we're going to really jump into the nitty gritty, and we call these the 5 steps to lodging tax compliance. Again, these are the 5 steps that my Lodge Tax has identified as being critical to maintaining your short-term rental within the guidelines of the law. So what I'm going to do now is really break down what your compliance strategy needs to compose. First is the initial research of your lodging tax requirements. So like we saw in that Myrtle Beach, South Carolina example, we need to segregate the various jurisdictions by agency. We have to approach the state to inform ourselves of any state required lodging taxes. We need to approach our county of any county required lodging taxes and the city for any city required lodging taxes. Now, that's not to say that your state, county, or city will have lodging tax requirements. Requirements may be at the state, county, city level, or any combination of those levels of jurisdiction, meaning you could have state and county requirements, perhaps just county and city. It really depends. Any combination of those levels of jurisdiction. We also need to call out at the very bottom, we have that marketplace nuance. When we're establishing the total lodging tax rate and approaching each level of jurisdiction, we also need to be aware of which jurisdictions a vacation rental marketplace may cover. So when we're building our tax rate application in Lodgify or a property management software or whatever you're using to manage that tax rate, we have to understand what taxes or jurisdictions a marketplace is automatically collecting and remitting and what taxes they are not. This way, we're not double collecting or double paying any taxes that are addressed by a marketplace. I also introduce in this initial research step the licensing and registration requirements. So the two critical components of lodging tax compliance are first, registration and licensing, and then the lodging tax process. In order to collect and pay the taxes that we're collecting from the guests, there are always some sort of registration requirements. Every property in the United States has some form of registration that needs to be completed. And that's going to segue into our next topic, where we're going to dive into what that registration process looks like and some critical components that we pay attention to. As I mentioned, just about every single rental property in the United States requires some form of registration. Now, some registrations will have their own terminology. So we have short-term rental permits, vacation rental licenses, sales tax accounts. Pay very close attention to the terminology and the forms of registration required for your short-term rental business in your location. Identify the applications that need to be completed and the various requirements and items that are needed to satisfy all of the requirements of that application. There are really two forms of registration that I like to break it out. That way it makes it easy for people to understand what to look out for. I call out registrations that have tax implications. So this is something like an occupancy tax account. or a sales tax license. These are registrations that are required for us to maintain a short-term rental business, and establishing these registrations also requires an ongoing tax return to be filed. So there's ongoing maintenance in order to keep these licenses in good standing. The other form of registration that I talk about is a non-tax license. So these are just simply licenses or permits that are required of short-term rental properties. When you establish these licenses, they don't necessarily require an ongoing tax return to be filed every single period. However, we do need to be aware of any renewal processes that may be due. Licenses may come due or need to be renewed every year or every other year. Some licenses are good until we cancel them or indicate to the jurisdiction that we're no longer operating our short-term rental. So those are really great ways to approach your licenses, understanding what to apply for and then what the implications of holding these licenses so we can maintain that compliance process. I always like to bring up the topic when listing on a marketplace. When listing on a marketplace, you'll need to go through the registration and licensing processes. This is one of the things that we will dive into in that next section. And so when you are using a vacation rental marketplace like Airbnb or Vrbo, this does not excuse owners and property managers from establishing any of the registrations that they need to operate their short-term rental. It's always a very dangerous assumption to think that if a marketplace is automatically collecting and remitting a form of tax, that we, as the host, don't need to do anything. And so this is really that battle call for hosts because it really tricks so many owners and property managers, regardless of how you distribute your listings or formulate your transactions. You will always need to establish the appropriate state and local registrations to operate the short-term rental business. The third step of lodging tax compliance is collecting the taxes from your guests. So we're going to assume that everybody has completed the first step and has identified their tax and registration requirements, and then processed by diving in further to those registration requirements. Now we've set up all of the licenses and tax accounts that we need to operate our short-term rental. When we are distributing our short-term rental listing across different marketplaces or websites, even if we have our own, however we do that outreach to market our products to the guests, we have to apply these taxes in that short-term rental or the reservation transaction. The most important concept is that these taxes need to be applied to all mandatory fees that comprise your short-term rental transaction. When a guest makes a reservation, we should be applying the lodging tax rate to the total amount they pay, such as rent plus cleaning fee, pet fee, resort fee, pool fee, baby crib fee, any fee that is baked into the reservation that we charge our guests during that transaction, that is the amount to which we apply the lodging tax percentage, or what we call taxable revenue. Now, there are certain fees, such as a third-party insurance or a refundable damage deposit, where we don't need to charge taxes. Other exceptions may include a nonprofit organization or military or government personnel who may request to book our properties. A really good way to approach that situation, if you are faced with a renter who claims tax exempt status, in many cases, and especially using online marketplaces, you may not be able to waive the tax amount during the initial transaction. I also recommend that if you are approached by a guest who's claiming tax exempt status, that you require they send you some form of documentation proving that exemption status. Once you receive that exemption letter, save that for your records, and then you can refund the tax amount to them and claim those earnings as non-taxable revenue. When listing on a marketplace, love going over this concept, make sure you know which taxes the marketplace is responsible or automatically collecting and remitting, and which taxes you are required to collect and remit. This way, we're not double charging or double paying any taxes to the jurisdictions. The fourth step of lodging tax requirements is physically filing the tax returns and documents that are due each period. The first thing that you'll want to do when approaching your own research terms is determining the filing frequency. This is how often your tax returns are due. Lodging tax returns, short-term rental hosts are generally filing on a monthly or quarterly basis. I love calling that out because it's sometimes a wake-up call to so many owners. These are not generally annual taxes like income tax. This is an ongoing and often tax requirement that we need to stay on top of. Of course, their due dates. We're all adults. I think we all went through grade school. We understand how to meet due dates, but these due dates may be complex and they may even differ from one another if we're filing to multiple government jurisdictions. So when we put together our tax filing schedule or calendar, if you will, we want to understand what tax returns need to be filed and how often, whether that's monthly or quarterly, that may differ. Your state might require a monthly tax return. Your county may require a quarterly tax return. So those may be the same, they may differ. That's also true for the due dates set by each jurisdiction. Every government agency gets to establish their own filing frequency and the due dates where their returns are due. The vast majority of the United States declares their due dates for lodging tax returns as the 20th or the last day, the 30th or 31st of the month. So very important we pay attention to when those tax returns are due so we're not filing anything late and of course avoiding penalties. There is also variance in the due dates that lodging tax returns are due. We see some due dates as early as the 10th of the month, the 15th, or the 25th. Generally, the 20th and the last day of the month are what most jurisdictions set as their due date, but certainly lots of variation in that across the country as well. I like to point out that many states and jurisdictions, or these markets, if you will, are moving to an online filing source. So a lot of the tax returns that we file to our state or local jurisdictions will be using an online filing portal in order to process those tax returns and our tax payments. So it's very important that as short-term rental hosts, we familiarize ourselves with these online filing portals. That way we know how to log in, how to navigate these online systems, and effectively make our lodging tax filing. Some jurisdictions are using a more primitive paper filing process, so we always get a chuckle here when hosts receive some form of coupon book. It always seems so old-fashioned and gives us a little laugh when we see jurisdictions using those. So understand how these tax returns need to be filed each period. Are we going online or are we actually sending a paper form with a check? Lastly, filing returns is required even if no lodging tax is collected. If, once we establish the various registrations and licenses for our vacation rental property, the jurisdiction is then expecting a timely tax return filing every single period, regardless of the revenue amount collected. So whether if you had activity or no activity, they're expecting that tax document from us to keep that account in good standing. If we don't file a business tax return, then that's going to leave an outstanding period on our license, and that will result in penalties and potentially other consequences as well. When we're filing our returns, there may be no tax due. This is also a great way to call out that marketplace nuance. When we're filing our own business tax returns, we again need to consider what taxes are being collected and remitted by the marketplace and ensuring that we are filing our tax returns in a way that accommodates that nuance. Again, we don't want to double pay any taxes or double collect any taxes from our guests. Certainly want to make sure we're accommodating that detail. The fifth and final step to managing your lodging tax compliance strategy is understanding that you might receive some form of correspondence. We are constantly sending monthly returns or payments or quarterly to our jurisdictions. So this is happening every single month or quarter. We are communicating in that way with these government agencies. So it's really not uncommon for the government agency to reach back out to us. You might receive some form of notice or notification letter or demand. The possibilities are actually truly endless on what a jurisdiction can be reaching out to us to communicate. Some main examples might be a notice of audit or informing you of an incorrectly completed tax return. Perhaps we didn't file a tax return and they're informing us of a missing tax period on our account, or perhaps some other form of changes related to that jurisdiction. So I'd like to call out that we all need to be constantly looking out for these forms of communication from the jurisdictions where we're filing. When we're using an online filing portal to submit your tax returns, a lot of those jurisdictions will electronically send you these notifications. So just an important call out there. Again, familiarize yourself with those online filing portals. They'll have the mechanism to file your taxes. They'll also have a mechanism to organize documents and notices and even like a messaging center. This is a great way to communicate with that jurisdiction. When we receive some sort of notice or correspondence, it's important that we address that issue as soon as possible so we don't continue to accrue any penalties or interest that might be applying to that case. Identify who is sending you this notice. Is it coming from the county or the state or the city? This way you can reach out to the appropriate jurisdiction and receive more information on how to rectify this correspondence. And lastly, we want to make sure to notice an identifying factor. There will be a license number, a letter ID, a case number, or reference number. So as we reach out to the jurisdiction that sent this notice, we want to identify the case number or whatever they've used so that agent can bring up your specific case, whether you have to call, email back, or use that online filing portal. It's best to meet those jurisdictions where they're at in order to warrant the best and fastest response in order to bring our licenses and tax accounts up to date. With only about 10 minutes left, we're kind of going to go fast through the tax remittance programs and the marketplaces that we use. We really did a great job of addressing this nuance throughout the presentation. So I think everybody has a decent understanding of what marketplaces are doing. But we're going to break it down. What is a tax remittance program? A tax remittance program is when a marketplace such as Airbnb or Vrbo, when they sign an agreement with a specific state or local jurisdiction to take on the responsibility of remitting taxes in that jurisdiction. So there are specific jurisdictions or government agencies that will automatically be paid by that marketplace. One thing that we like to call out is that short-term rental hosts and property managers still need to go through the registration process like we talked about and the tax filing process to submit the appropriate documents to those state and local jurisdictions. Essentially, all we're doing is understanding what taxes are going to be covered by the online marketplaces and what taxes are not being covered by that marketplace. Therefore, when we file our own business tax returns, we're not double paying or overpaying any of those taxes that were already addressed. We don't want any taxes coming out of our host's pocket. They should be collected from the guest and just simply passed on to the jurisdictions. So in many jurisdictions, you may be filing a tax return where no money is due. Again, that is the correct process to keep our licenses and tax accounts up to date. Also, just like to simply call out, if you're using multiple channels, that's going to increase the complexity of your lodging tax compliance strategy. So we have to address the various state, county, and city jurisdictions all as separate entities. We also have to treat various marketplaces like Airbnb, Vrbo, Booking.com. Any marketplace, we have to treat those separately as well, and understanding how they address lodging taxes because they are separate organizations and their lodging tax compliance strategy or their tax remittance programs will differ as well. We're going to go through this example of Myrtle Beach. I love bringing this back because it's really just the most relevant example that we can. And this is going to be an example when renting or listing the property through Airbnb. Back on the right side, I played with our chart there that lists out the various sub-tax rates. And you can see all the taxes that are grayed out are taxes that are automatically collected and remitted by Airbnb and Vrbo. So in this scenario, Airbnb and Vrbo do the exact same thing, but that doesn't occur in every single jurisdiction, but it is relevant for this one. We know that the vacation rental marketplace is going to automatically collect and remit the taxes that are sent to the state and Horry County. However, so we don't want to double pay those. We would have no money due for reservations on these marketplace platforms. However, when we file our city tax returns to Myrtle Beach, we will include a payment with that remittance. So this is just another great example of how all the complex topics of lodging tax form together in one example that's super relevant to a big audience. I touched on this just a minute ago, but the more listing channels that we use to operate and market our rental properties, the increased tax complication. Each rental marketplace has its own tax remittance program, and you need to segregate your research by addressing each vacation rental marketplace separately, as well as the various state and local jurisdictions. I'm going to kind of fly through our product demo here so we can get to our question and answer section. I might go a little over time, so if anybody has more time to allocate to the question and answer, as long as Alberto is okay with it, we might be able to go a few minutes over and take some questions. My Lodge Tax has been around since 2003. Our office is located in Denver, Colorado. We are part of the Avalara suite of business services. So my Lodge Tax identifies and provides service around all 5 levels of the lodging tax compliance process that we went over today, doing the research to identify all of the tax and registration requirements. We help our users navigate and apply for all of the various short-term rental registrations that are required. We do and prepare the actual tax returns for our hosts, and we handle any notices or correspondence that you might receive from a tax agency. My Lodge Tax charges a $299 setup fee per rental unit and a monthly subscription fee starting at $27 per property. So we'll take a look at the various plans that we have and how we segregate our customer types, if you will, and service our different types of customers, and then take a look at the product. For operators listing 1 to 5 rental units, if you're not going to expand your short-term rental business beyond 5 properties, we have a product that's just My Lodge Tax, which services this segment. That's where we offer the $27 per month per property. My Lodge Tax also works with property management companies that operate 6 or more properties. Of course, as we increase our inventory, our lodging tax compliance strategy also becomes more complex. And so pricing for My Lodge Tax Pro starts at $39 per month per property. Depending on the volume, that monthly subscription fee may come down. So there are opportunities for discounts, but essentially those prices reflect the complexities and the additional attention and support that My Lodge Tax goes through to support our different customer segments. We work with both rental owners and property management services. When you're building your My Lodge Tax account, we require specific property and taxpayer information. Rental properties may be owned by an individual or a sole proprietorship, if you will, in which case the user would enter the name, social security number, or ITIN in which they own their rental property. Properties that are held in an LLC or some form of business entity, these users will enter their company name and their FEIN. We also require, you see at the bottom, the name and social security number or ITIN of an officer or member of the company that you've set up. So if you operate, whether using an entity or a sole proprietor, we work with both ownership terms. The meat and potatoes of My Lodge Tax is the revenue reporting process. I called out that lodging taxes are filed on a monthly or quarterly basis. Therefore, every month, our users are asked to log in to their My Lodge Tax account and report their total gross revenue by marketplace. So you'll see in this example, a user would log in and report any earnings collected from the Airbnb platform in that line that says Airbnb. They would report any HomeAway or Vrbo revenue in that Vrbo line, and any other revenue or direct bookings would be populated in that direct bookings field. This is how My Lodge Tax calculates the tax amount due, charges that tax amount to a bank account that users put on file, and then uses the revenue report and the payment to distribute the lodging tax returns to the various state and local jurisdictions. Every time a user reports their earnings to My Lodge Tax, this information is saved to the My Lodge Tax profile. So users are able to navigate through their account into their tax history section, which you see here, and select, you can see a summary of the revenue and the taxes paid. Users are also able to click into each of those entries and see the specific details and filing statuses of their returns. That concludes my presentation. And so now we're going to go into our Q&A section. I know we're a bit over time, so as long as Alberto is okay with it, we can take a few questions.
Yeah, well, first of all, thank you very much, Justin. I think it was super insightful, great presentation. I'm sure people will really appreciate all your knowledge and your insights. We still have a few hundred people online and we have a few questions. So let's say we stay for 10-15 minutes and try to answer some of them. I mean, we have a lot of them. There are some questions in the chat. Also, in the Ask a Question, we have like 23 questions.
Uh-huh.
So let's pick a few of them and then the rest we can send them to you maybe. And then we can answer them back in the blog post recap that we're going to do, or we'll try to answer them ourselves. Sounds good?
Absolutely. I just opened the Q&A chat box. I got to say, I'm not necessarily surprised we have hundreds of people staying on because there's always questions that people want to answer. That's a lot of information that we just went through. So I'm going to take a question here that is, I love getting this question. It's something that I speak with clients every day about. And this is about the business entity in which we use to operate our vacation rental. The question says, if I form an entity in the state where I live, but my short-term rental property is located in another state, what do I have to do to pay my lodging taxes? This goes to a concept called a foreign entity registration. And this is relevant to many people who establish an LLC, but their short-term rental property resides in another state. So a foreign entity registration is an application that hosts must complete in order to essentially put their business entity on the public record in the state where their property is located. When you establish the licenses and the registrations for your vacation rental, those government agencies are going to reference the public record to ensure that your business is registered with the Secretary of State. That's part of the processing that they do to issue a license. If your entity, is not registered with that Secretary of State, they're not going to be able to process a license. So this is a very important piece that anybody who's using a foreign corporation needs to understand this process. It's not a process covered under the My Lodge Tax product, but something that we certainly help identify and provide a bit of guidance to. That's a phenomenal question.
All right. Also, before we continue with the tax question, there is a question about the integration between Lodgify and Avalara. I just wanted to clarify the integration is not there yet, but it's currently in the pipeline. I share on the chat. Well, I also added a poll. So if you are interested on it, you can click on it and say yes, but also share the roadmap of different integrations. Avalara is on that list. So if that's something that it's important for you, you can upvote that and we will give it top priority. Now, I also see a few questions just in regarding different, for example, expenses like cleaning fees, repair, or even like pool heating fee. If those type of fees are also taxable, maybe we can start by those.
Yeah, let's absolutely go back and touch on those concepts because they're super critical to making sure we're charging our guests the correct amount of taxes and, of course, reporting the appropriate revenue amounts each month. Fees like cleaning fees or pool heating fee or baby crib fee, any fee that you bake into the short-term rental reservation transaction is a taxable fee. We merely, as an industry, have adopted a culture of itemizing various products or services that the guest will receive as part of their reservation. However, the lodging tax amount is applied to the total amount paid by the guest or the sum of all mandatory fees. I look at it like this. You could charge somebody $1,000 for rent and a $500 cleaning fee. You have to charge tax on that $1,500. Other other short-term rentals, not as common. They might just say The rent is $1,500. That includes any cleaning services, baby cribs, any other ancillary services that you would apply to that reservation. Essentially, the total amount paid by the guest is the amount to which we apply lodging tax. So that again includes cleaning fees and pool fees, bike fee, all those type of things. Also flip that coin and help provide a bit of guidance on the income tax portion, because these are essentially expenses. So you will want to keep a record of those fees paid. We have to charge this tax or include it as taxable revenue in the lodging transaction. It's not permissible to take expenses or deductions for these purposes when you file your lodging tax returns. Expenses and deductions is exclusively an income tax requirement. So keep a record of those expenses. You don't need them. You wouldn't be deducting those things from your lodging tax filings, but you would apply those to your income tax when you go through that process with your accountant. Great question.
An even better answer. Thank you very much, Justin. So, also another interesting one. I saw a couple about LLCs. We can tackle this one. Is there or are there any tax advantages in setting up the short-term rental business as an LLC?
That's a great question. I won't be able to explain any tax advantages as those are related to income taxes. However, when we look at the lodging tax application, there really is no difference. Lodging taxes can be filed using a business entity like an LLC or as the sole proprietorship. For lodging tax purposes, there's no difference, but there may be a difference in other tax implications that we're subject to follow, and that's a question for legal counsel or an accountant.
Thank you. I also see a couple of questions regarding Avalara and my lodge tax. Those we can also get the answer and send them to you after the meeting. Maybe we can stick now to the ones regarding taxes per se. So do you want to, for example, can I know? I think I can pick this one. If you want to pick another one afterwards, Justin, feel free to do so. Can an owner deduct expenses for costs associated with having to stay somewhere else while their personal home is booked? And I also saw one that was related about living in your property, not living there when you're a short-term rental. So in general, if you can clarify those couple of concepts, that would be great.
Absolutely. It again just goes back to the concept of segregating lodging tax from income taxes. Any questions or uncertainty around deductions and expenses, those are going to be related to income tax. So talk to your accountant about those nuances and your situation. That's going to apply to income tax. These expenses and deductions do not apply to our lodging tax filings.
Awesome. Thank you. We still have a couple of minutes. Maybe have you seen any of the questions that you especially like to tackle?
Yes, I was one question about the My Lodge tax process of helping establish registrations, if you want me to go over that.
Sure, go ahead.
Fabulous. So one of our attendees asked, what does the process of My Lodge tax helping hosts through the registration process look like? I love going over the process of getting started with My Lodge tax. It identifies how you formulate your own strategy and what that experience looks like as you engage with My Lodge. My Lodge tax takes approximately 1 month to establish the various registrations and licenses that apply to each short-term rental. For example, if a property is subscribed with the My Lodge tax service in February, My Lodge tax would establish those registrations to be effective March 1st. If you sign up with My Lodge tax in March, then you'll be given an April start date. So you can understand that rolling a start date assignment based on when users enroll for My Lodge tax. We try to keep the registration process as hands off as possible. What that means is My Lodge tax will identify the appropriate registrations, licenses, and applications, and then complete and submit those applications on our users' behalf. However, there may be requirements in certain jurisdictions that do require the owner or the property manager's involvement. There are certain licenses where my lodge tax is just simply not able to satisfy all of those application requirements. In these cases, our licensing department will identify and send our users instructions on what additional information or action needs to be required to set up those licenses. So in some scenarios, a location or property might be a very hands-off experience for a user. My lodge tax will apply, submit, and establish those registrations. In some locations, it might be a little more hands-on, and our licensing team would be in contact to facilitate the establishment of that license or permit. Great question.
All right. I think we have time for two more really quickly. One, because Luis is asking for a clarification about non-refundable fees being taxable or not. It's one of the last questions, if you can see that. So maybe if you can provide some extra clarification, for example, if the fee is refundable, then it's not taxable as long as the refund is provided. Maybe this is something that we can clarify.
That's correct. If you are including refundable fees into the lodging tax transaction, then you would not include that amount of revenue into the amount that we apply taxes. So anything refundable does not get included in that taxable revenue amount that we apply to the guests.
Thank you. And just the last one, because we don't have time for more, it's a more general question about how or where can I find out the tax entities that are involved on my property. We already went over a bit of those concepts at the beginning, but maybe you can again clarify a bit of what they need to do in order to find those entities.
Sure, it's been roughly an hour since we've actually identified and those call outs. So certainly something good to go back. And this is a great place to end, a great last question, because one of the best ways to approach our own compliance strategy is by understanding how we need to conduct our own research. The first thing that I say is you need to segregate the various levels of jurisdiction, the state, the county, the city. Now, depending on where that property is located, those levels of jurisdiction might be controlled by different agencies. State taxes are generally controlled by the State Department of Revenue. So contact the Department of Revenue for any state requirements. Ask them if there are any other government agencies or any other state agencies, that would apply to the tax or registration. A great example of this is Florida. It's one of the biggest, I think it is the biggest vacation rental market in the United States. There are two state agencies that require registration. That is the Secretary of State and the Florida Division of Business and Professional Regulation. So contact the Department of Revenue, ask if there are any other government agencies that require registration, and then you work your way down the line. Reach out to your county tax collector or comptroller. Perhaps you could call City Hall. Reach out to each level of jurisdiction and just ask these questions. Ask them what the terminology is. Explain to them the purpose and the nature of your business. And that's the best way to approach your lodging tax compliance strategy, is by first segregating and approaching each of those levels of jurisdiction separately and putting all that information together as an aggregate.
Well, that was the last question. Thank you very much, Justin. I think it was amazing all the information that you provided the audience with. I'm sure now I can almost say that I'm an expert in taxes. Well, not really, but it was really, really insightful. So thank you very much. We replied to this at the beginning. We will record, like, this webinar has been recorded. We will send it to you. We will send to all the registered users an email probably on Friday with the video, a link to the video on YouTube. Also a blog recap where we will include the Justin's presentation, also the links to Avalara and to Lodgify, and a recap. I know we have a lot of questions. Some of them were left unanswered. We'll try to answer some of those and add them to the blog as well. And I also know that some people were from other countries, had questions from Canada, UK, different markets. So we will be also attaching a survey where you can leave your feedback suggestions, not only for this session, but also for upcoming sessions. We will be happy to listen to your suggestions, and we will do the best we can to provide solutions for that. So thank you again, Justin. Justin, thank you to everyone in the audience. It's been amazing to have you all here. Looking forward to see you in the next one.
Absolutely. Thank you so much, Alberto and Lodgify, for co-hosting, helping promote, and having us join so we can talk about lodging taxes. Certainly, again, a critical component of the short-term rental business. And we invite anybody who didn't get their questions answered or has more questions to please reach out to My Lodge Tax, where we have agents available by phone and email. Our website is simply mylodgetax.com. Everybody, like you said, will receive a copy of this presentation and contact information so they can reach out and get more information, get in touch with somebody to help.
Absolutely. Thank you all. Have a great day. See you in the next one.
Thank
Bye.
you all. Take care. Bye-bye.